Sampham, this is Shreya from Samaya. And now we'll be discussing about the CA Inter time limits here. This contains all the time limits in the audit syllabus for the CA Inter. You might get this PDF in the Telegram channel. The link is in the description below. And the first time limit is retention of the engagement documentation. That is, the author has to retain the engagement documentation. The audit file that he maintains with regards to any kind of engagement has to be held till 7 years, not less than 7 years. And the final assembly of any audit file while doing the audit has to be completed within 60 days from the date of auditor's report. And that's second. And internal audit is this will discuss in the monetary limit section, but why I have given here in the regards to time limit section is when during the transitionary provisions that all these limits have been complied with the have been touched by the company, and they have not appointed the internal auditor by the time this Companies Act 2013 had been came into effect. Then within 16 months, within 6 months, within 6 months from the commencement of this act, they have to comply with the internal audit provisions. All the companies who have satisfied these monetary limits. That's a transitionary provision. And with regards to fraud reporting, we know that was fraud reporting, but let it be any fraud, whether it's below 1 lakh, 1 CR, or more than 1 CR, what the auditor should do? He has to communicate within 2 days to the board of directors or the audit committee. Okay, if it is 1 CR or more, then what he has to do? He has additional responsibility to report to the central government. So what they ask within 45 days for seeking reply to what? To whom? The board and the audit committee. The auditor communicates within 2 days to board of directors or the audit committee and seeking their reply with regards to that fraud within 45 days. And after their reply, the auditor shall communicate to central government within 15 days in form ADT 4. That's what you have to write. Then that's here with regards to disqualifications of the auditor. If any relative or partner holding any security or interest in the company in which he is an auditor, from the date of acquisition of that interest within 60 days, the corrective action has to be taken by the auditor. That is, the responsibility lies with the auditor. If they hold any security or interest more than 1 lakh, up to 1 lakh of the face value, that's fine. But more than 1 lakh, the auditor has to make corrective actions within 60 days. That is, you see here, it may be noted that the relative may hold security interest of the company face value not exceeding 1 lakh rupees. That is, up to 1 lakh, the relative may hold the security or interest. And with regards to here is file a notice with regards to auditor's appointment with register. Since it's a statutory auditor, it is 15 days. When it is a cost auditor, that we'll discuss later, it's 30 days. For cost auditor, it's 30 days, and for a statutory auditor, it is 15 days. They have to communicate with the registrar. And with regards to the removal of the auditor, a special resolution has to be formed. They have to take a permission or special resolution by the board. First, they have to take special resolution by the board to remove the auditor before expiry of his term. And they have to communicate to the central government in form ADT 2. Within how many days? Within 30 days. And after that, the central government will give an approval to remove that auditor, right? Then within 60 days, they have to pass a special resolution in the AGM. They have to make an AGM there. They have to hold a general meeting. And they pass a special resolution there also. And when there was central government applies to the tribunal with regards to any kind of change that was required by the auditor, then if the tribunal satisfies that the auditor has to be changed for that company, it has to give an order within 15 days. If it's satisfied, the change of auditor is required and he will not function as auditor, and the central government may appoint another auditor in that place. Okay, these were two things. And the C&AG has rights with regards to test audit or supplementary audit or comment upon the supplementary audit, etc. These comes under C&AG rights. Within how many days? Within 60 days, they could go and conduct a supplementary audit. and books of accounts that were kept at a place other than the registered place by the company, then within 7 days they have to intimate to the registrar in writing. And with regards to cost auditor appointment, the cost auditor has to be appointed within 180 days from the commencement of every financial year, and he will hold the office after the expiry of till the expiry of 180 days from the end of the financial year, and he also have to give or cost audit report then only. And with regards to the, as we have discussed earlier, for statutory auditors is 15 days for the intimation to registrar. Now it's cost auditor, it is 30 days to intimate to the central government. And the cost auditor appointed will hold the office till the expiry of 180 days, and any casual vacancy, whether it be casual vacancy of any auditor or any cost auditor or LLP auditor, any casual vacancy, whether it's through resignation, removal, etc., any casual vacancy has to be filled by the board of directors within 30 days. Okay. And the cost auditor shall submit cost auditor report within 180 days from the end of the financial year in form CRA 3. And with regards to the company shall within 30 days from date of receipt of cost audit report shall furnish in form CRA 4 all the information or cost audit report to the central government with regards to that for every reservation or qualification that were contained in form CRA 4. And with regards to CSR projects, if any project that was ongoing, then no problem at all. This provision does not apply for that. If any projects that were held or stayed, then if that, okay, for 2% or something amount that of the turnover or something else have to be spent as per CSR expenditure, right? If they were not spent in the year, then within 6 months from the expiry of the financial year, they have to spend or they have to transfer that amount, the unspent amount, to a fund specified in 7 of Companies Act, Schedule 7 of Companies Act. There's a list there, and they have to spend within 6 months here. Unspent amount has to be transferred to the fund within 6 months. And with regards to the non-eligibility of appointment as an auditor, if the auditor had been convicted by a court and the 10 years had not elapsed from the date of conviction, you see, from the date of conviction, not from the date of expiry of the what the imprisonment term, etc. But remember, it's from date of conviction. From then 10 years have not elapsed, till then he will be not eligible further to be appointed as an auditor. And auditor appointment term, we know that if it's an individual, 1 term of 5 consecutive years. If it's audit firm, 2 terms of 5 consecutive years. And with regards to rotation of auditors, there's a cooling period for the period of 5 consecutive years for him. And the incoming auditor shall not be from the same network of firms. And we have got an MCQ, we have discussed in our case scenarios also, right? What's the name for a network firm could have? That is affiliates. Okay, some name, something like Royal Affiliates, etc., like that. And with regards to cash credit loans, when the cash credit loans or cash credit could be accounts could be out of order, is that when continuously the outstanding amount exceeds sanction limit or drawing power. That's one case. If at all, it was not, the outstanding amount was not excess, but there were no credits for a period of 90 days. In both the cases, it is treated as an out of order scenario, or the credits were not enough to cover the interest at least. First of all, they are not. First of all, the outstanding limit was exceeding the cash limit and drawing power. Second thing is that there were no credits at all for continuous 90 days, and moreover, if there were credits, they were not even sufficient enough to cover the interest at least. Then for a continuous 90 days, then it's an out of order account. And government guaranteed advances is that whenever government gets guaranteed any kind of advance, it's like promising that government would pay even if the borrower had not repaid the loan. So with regards to that, the central government, if it's guaranteed by a central government, even though that it's an NPA, for the asset recognition purpose, it need not be treated as an NPA. But if so, a state government, it would be treated as NPA both under the asset classification and income recognition also. But if it's a central government guaranteed advance, just for the purpose of asset classification, it would not be treated as NPA. It would be treated as NPA for the income recognition classification. Okay, for the period of 90 days with regards to that. And drawing power is the limits or the stock statements have to be reviewed for at least 3 months. It should not be older than, the stock statement should not be older than the 3 months, otherwise it would be treated as an irregular. And with thus the continuous provision with regards to that. And the drawing power register has to be updated every month. And with regards to C&AG audit or C&AG rights, we have already discussed that the C&AG has right within 60 days to conduct a supplementary audit, comment upon or supplement such audit report, and do test audit. And with regards to NGO accounts, you see, the it has to submit his accounts of the NGO audited by the prescribed authorities and all, and it has to be submitted in that format within how many days? Within 60 days from the closure of the financial year, that is by 30th May. Remember, this is not May 31st, it is May 30 for the NGO. Okay, an O here and an O here. Okay, 30th May. And returns to be maintained and filed by LLP, the same thing. They also have to be submitted by with ROC within 60 days from the closure of the financial year in Form 8, the statement of solvency, and annual return in Form 11 within 60 days. And Form 8 is within 30 days from the end of 6 months of the financial year. So there's a different time limit here. And for Form 11, it is 60 days. Please make a note over there. And with regards to the LLPs, if the LLPs have not filed Form 11 or Form 8, they can pay within 300 days with an additional fee. Even after the due date, they can file the forms for 300 days with the additional fees. But even after the 300 days, if they fail to file those forms, they will be liable to be prosecuted. And with regards to the appointment of LLP, as we have already said, if it's a casual vacancy, that has to be filled within 30 days. And with regards to inquiry under section 78 for the registrar, there have to be a prior notice of 15 days have to be given to the multi-state cooperative societies. And with regards to central registrar powers, what the central registrar powers, it has powers to access all the books of accounts. And with regards to that, and what he can do, he can serve a notice for the general meeting not less than 7 days. Okay, this is the time limit for the general meeting notice for the societies. And with regards to that, what all the other powers he has powers to examine any person on oath. And the central registrar, within a period of 3 months from the date of receipt of the report, what he can do, he can communicate the report of inquiry to the society and the financial institutions to which the society is affiliated. Two parties, society and the financial institution where society is affiliated, and the person or authority from whom inquiry is required or needed. And with regards to the inspection under section 79, same as per inquiry here also a prior period of 15 days notice is required. And the appointment of auditors other than a government company, it has been given as a paragraph or a tree diagram that would be attached in the telegram channel. What is that? For the first AGM, it would be hold till the first AGM, and the later it would be ratified, and he will hold till 6th AGM, and later on every 5 consecutive years, and every year it will be ratified for an individual. If it's an audit firm, for 10 years, every year it will be ratified. That's what they're talking about. And what are the special features for the cooperative audit? Is that the overdue classification? The overdue classification is 6 months to 5 years and more than 5 years. It has to be classified in this. Usually, for every company, what we do, like 30 days or 90 days, we usually go with like that with regards to SMEs and all, for the banks as well. But here it is for a longer period of time, 6 months to 5 years, and more than 5 years with the overdue classification. And with regards to the appointment of auditors, under Multi-State Cooperatives Act, it is the same. First, the board will have to appoint the first auditor within 1 month from the date of registration. That is same as per the company also. And if they fail to do that, then the society members exercise that option and they appoint the first auditor, and he will be continued till conclusion of next annual general meeting of the society. And with regards to central power of central government is that, you see, on receipt of report by the special auditor, if the central government has taken, they can take some action with regards to any kind of fraud or misconduct that had happened in the society. If it had not taken any action, the report within 4 months, then the society could circulate the extract or copy of that along with all the members, and among all the members, or it has to be read before in the meeting, in the next general meeting. With regards to that, 4 months, the central government has to take some action from the date of report of the special auditor. And inquiry, as we have said, at the central register within a period of 3 months. What we have discussed it here, it has to communicate to the society and the financial institutions in which it is affiliated. The same thing also goes here. And with regards to that, and the final assembly 60 days, that's also here, that's also discussed in starting. And retesting of controls in an entity has to be retested by the auditor at least once in the 3 years based upon the professional judgment. It could be a lower period of time also. And with regards to that, we also know that the audit evidence have to be done by retesting, reperformance, recalculation, inquiry, etc. Right? For the internal controls, he also have to form an opinion on the internal controls around whose environment the financial statements were prepared. Because on the financial statement, he has to form an opinion, right? For that, and he has to retest the controls. And that's with regards to the time limits. And do watch the monetary limits video also, and do subscribe to get notified for the audit marathon that we are going to have for 3 days, that is 21, 22, 23, morning 7 a.m. And happy learning and all the best for your May 2023 examinations.